Hey guys, Sean Bougie, surplusfundsriches.net. Today we're talking about tax lien investing, tax lien certificate investing. This is what can go wrong. This is what they're not telling you, okay? When investing in tax liens or tax certificates, you're paying the county the unpaid taxes due on a property in return for getting a guaranteed return when the county forecloses on it later. The county tacks on your return to the minimum bid, and then when they go to sell it, they sell that property at a tax, sometimes they'll call it tax deed sale or a tax deed auction or tax deed foreclosure. That has to happen for them to pay you back. So is this investing really risk-free and high return? Also called, by the way, let me take a quick, some of you guys are coming here because you also saw it come up as tax yield investing. There's a spoiler alert here, okay? If they have to change the name of the investment, there's usually an issue. No, it's not risk-free investing, and no, it isn't guaranteed. I know because I've done it and gotten burned, even trying to use tax lien investing to end up with the property. It's another play. Let me tell you how I've gotten burned. I don't invest in tax liens anymore, choosing to flip pre-tax sale properties with lower risk and no fix-up. Instead, we teach that on our site, and that's 100% returns plus. So let me get into what I ran into. Here are my experiences, and believe me, you want to watch this to hear all the ways I didn't get that high risk-free return. There are no cheap lessons in real estate, and you might as well learn from my mistakes. Instead of your own before you spend any money. My first few deals were in a state where you had a guaranteed rate of return, guaranteed, right? So at the time, the hedge funds weren't gobbling up all those deals, which is happening these days, and you could find tax liens to buy pretty easily. With those deals, I later found out the guaranteed rate of return did not factor in costs that tax lien investors incurred. You're required to push the court to go forward with the foreclosure, so that could get you paid out from the proceeds from the sale. My guaranteed rate of return of 12% quickly became a lot less, and there were sometimes delays in getting paid. One of the deals that I had set up ready to go didn't sell at the auction. Now, like most of you guys, I assumed any property would sell, at least for the minimum bid, which would include the taxes and what I was owed on my return. That property was a strip of land owned by an HOA that was landlocked and couldn't be built on. It was worthless, and I was out my investment because the county couldn't sell it. Real quick, let me give you two more examples, then I'll continue. Two more examples of folks getting burned on tax liens because property wouldn't sell. 2008, county stopped selling property for a year to give folks a break. 2020, COVID, county stopped selling properties for up to a year and a half because of COVID. So yes, it does happen. And given the craziness that's going on with the real estate market right now, yes, it could happen again. So I just talked about the property was a strip of land owned by an HOA that was landlocked and couldn't be built on. It was worthless. I was out my investment because the county couldn't sell it. So I did a little more due diligence on the properties before buying the tax lien on them. I checked the zoning. I used the county GIS system to see the lot on their system. I checked for additional debt just to see what was there. I even checked Google Maps and the Street View. That worked until I ran into an IRS tax lien. Unfortunately, you can't check for those online in most states. The problem with the IRS tax liens is that the IRS has 120 days from the date of the sale to redeem the property. To do that, they have to pay the past due taxes and the return due to you. Now, they hardly ever redeem the property, guys. Here's the issue. With that particular county, they decided to wait until the 120 days were up to pay me. I don't know about you, time's money to me. So, of course, not giving up, continuing to follow this rabbit hole, I decided to take another approach. There are states where tax lien investors can actually get the property if it doesn't sell at auction. I thought, wow, wouldn't it be great to get the property for just the cost of taxes that were owed? Talk about a return on investment, right? So I started buying tax liens in those states, and I still did the due diligence, zoning, GIS, Google Maps, Street View, checking debt. Sure enough, I picked one up that didn't sell at the auction. I put the property in the market to sell it as is to an investor, thinking I would double my money. Well, we got to closing, and the title company closing the deal called me to tell me that I would be getting about what I paid for the tax lien, and that was it. I couldn't believe it. I had checked everything and I knew that the debt would be kicked out by the tax sale. I had even had a paralegal double check at the court that there wasn't an IRS tax lien that might have delayed my ability to resell the property. Turns out the property was in a super lien state. In a super lien state, HOA and condo associations have a priority lien that is often not kicked out by the tax auction. Bet you didn't know that. And here's where it gets even worse. In this super lien state, the HOA had the right to collect what they were due, even though they didn't have a judgment recorded before the foreclosure. So there's no way to check, short of calling the HOA before buying the tax lien, doing that in advance. My return on that deal was zero. I got my money back, but I got nothing for it. At that point, I realized that trying to use tax liens with the hope that I would end up with the property wasn't the best play. If the property, think about this for just one moment. If the property doesn't sell for the minimum bid at a tax auction, there's a reason. There's a problem with it if investors won't buy it. Okay? So I decided to try to find a state that was easy to work and settle on a good return. The state I picked was Florida because the county actually published title work for you. That saves a lot of research time. And I can easily look up case information online too. It's rare. Here are the problems with Florida. They are a super lien state, so HOA and condo association debt can actually swoop in and foreclose on property before the tax department does. While you will get paid your return because they have to pay that, the HOA or condo association foreclosure can drag out, delaying you getting paid. Florida is also a state where practically everyone opens a bankruptcy filing and notifies the court of that, which delays the sale until they drop the bankruptcy filing. I realized that if there was a problem, a cloud on the title, such as an HOA or condo lien, the investors wouldn't buy the property at the sale, so I would have to wait until the next sale, hoping that an uninformed buyer bought it at auction and possibly even then not get paid, right? So finally, Florida code enforcement liens. This is the other issue, which will also survive a tax auction. Work differently than anywhere else in the state, or rather the United States. Not only do they hit homeowners with a fee if they have to mow the yard or if they have an issue to fix, but they take it a step further. They put a per diem, daily penalties on the owner if they don't pay them the fee immediately. It can be $100 a day. Look this stuff up, guys. I couldn't believe it either. It can be $100 a day, $3,000 a month, and there's no cap. No cap. I've literally seen property with $50,000 owed to code enforcement because they had to cut the yard once. 50 grand for a one-time yard cut worth maybe $50. You want to know how to really make money on property with delinquent? And let's stop a moment. Why does that matter? Well, because the code enforcement lien will survive past the foreclosure. That $50,000 debt is still on it. It's not kicked off. Not code enforcement, okay? So nobody's going to buy it at the auction knowing that. And that's all public record in Florida. They're not going to buy it because they'd have to also cover that debt. So nobody's going to buy it. That means the county doesn't have any money coming in to pay you back. You want to know how to really make money on property with delinquent property taxes? There's two ways to do it, guys. One, buy the property from the owner right before the auction and pay off the taxes to stop the foreclosure. Resell the property to investors for double what you just paid, selling it as is, no fix-up, okay? You can do that in cash, sell it in cash in a matter of weeks because these guys are going to the auctions and they're not picking anything up, or they're outbidding each other to the point where they're bidding it up to retail. You picked it up for next to nothing from the owner at the last minute. Now you can flip it at least double your money for cash in a couple of weeks. We call that deed flipping, and we're talking about a 100% return, not 8 or 10%. And we will even partner with you on that. Go to the site, surplusfundsriches.net. The other method is to use the surplus funds method. A lot of people don't know about this. When a property sells for more money than the taxes owed or more money than the bank was owed in a mortgage foreclosure, the difference is owed back to the owner, the last owner prior to the sale, after all other debt is satisfied, right? A lot of times in tax sales, there is an additional debt, or otherwise that debt would have stepped in and stopped the foreclosure by paying off the tax debt. Okay. The average overage these days is 40 grand, and you can make 35% or more as a surplus funds recovery pro, helping them get that money. The way we do this is using attorneys and a structured buyout with the claimant, so we don't fall under any finder caps. We don't have to fall under any statutes, anything like that, as far as surplus funds recovery. And we'll partner with you on this. Both of those options are taught on our site. We even partner with folks on flips and on surplus funds recovery. Check us out at surplusfundsriches.net. If nothing else, guys, I hope you guys have learned from my mistakes, because I've made a lot of them. Okay. Have a great day.